Good evening, everyone. We are here today for the Yashaswini Idol Series 52. So, first of all, let me welcome CA Ravi Kumar Patwa, the Vice Chairman of WYMEC Committee, to welcome us all. So, let me also welcome all the speakers for today's session and the moderators. So, over to you, Ravi, sir.
Thank you, Kirti Madam. A very good evening to each and everyone present over here, especially to Lakshmi Rao Madam, who will be enlightening us on balance sheet analysis, interpretation of financial risks, and also to Madam Supriya Pandekar, who would be enlightening us on sustainable well-being. Uh, Friends, I'm sure that all of you have been benefited with the programs conducted under this Yashaswini scheme. We are continuously striving our level best to give you quality programs. I'm sure all of you are happy with it. Please do write to us on anything else which you want us to do, on any other kind of program or any other topics which you want us to cover in this series. Very soon from the Young and Women Professionals Excellence Committee, we will also be starting a series for the young people. There also, if you have anything to suggest to us, do write to the committee. I do welcome Madam Ami Cheda, Madam Rishu Arya, Madam Jasmine Choksi, and of course, Madam Kirti Agarwal for helping us in coordinating this session today. If any one of you have any idea in internal audit, if you intend that any one of you would be interested in contributing to internal audit, then kindly connect to me directly or to the Internal Audit Standards Board. From the Internal Audit Standards Board, we will be revamping the standards that we have. 16 internal audit standards have already been issued by the Internal Audit Standards Board, and we will be coming up with another set of internal audit standards. Plus, the already issued standards will also be undergoing changes wherever required to be in tune with the international standards. Further, there are industry specific guidances which we have. There also we will be updating those guidances, and we will also come up with new guidances covering new industries. Now you may be feeling, why am I talking about internal audit in a young and women professionals committee program? The reason why I'm doing this is that I intend to take this opportunity to include the women chartered accountants in the internal audit fold. I intend them to come forward and help us in the Internal Audit Standards Board as well, until Preeti Madam comes and gives the formal welcome address and starts the program formally. I thought I will take this opportunity. In addition to the Internal Audit Standards Board, if you have interest in the auditing standards, you may be aware that the Institute has already come up with the auditing standards for LLPs, and we have given the auditing standards for LLPs for public exposure. We have already uploaded them. Kindly give your comments on the auditing standards for LLPs. Many of us feel, the professionals, that the auditing standards are very difficult to follow, especially in case of smaller entities. Considering this in mind, from the Auditing and Assurance Standards Board, we have decided to come up with auditing standards for less complex entities. Very soon, we will be coming up with the drafts for the auditing standards for less complex entities. There also, we need a huge team of researchers and persons who can contribute to it. If any one of you are interested in that, kindly connect to the Auditing and Assurance Standards Board. Friends, Young and Women Professionals Excellence Committee is a committee dedicated to the betterment of women professionals as well as of the profession dedicated towards the betterment of professionals who are young, below 40. Till date, we were covering below 35, but this year onwards, we will be covering young people, young chartered accountants below 40. If you have anything in mind relating to the development of youth, specifically, because so far as the women chartered accountants are concerned, this committee has been working for the women chartered accountants for quite long. The youth have only come to this committee this year, in the current year. So we are new to it so far as working for the youth is concerned, so far as working for the young chartered accountants are concerned. We have already conceptualized certain ideas, but still we look forward to your suggestions and guidance if possible. And since we are already at 5:08 now, I've spoken for 7 minutes. I don't think I should speak more because the members are interested to hear from Lakshmi Rao madam. Members are more interested to, understand the technicalities of the things of balance sheet analysis and interpretation of financial ratios. So, without waiting for Preeti ma'am, I thought if she joins, then she will give her address and then we can start the program. But I believe and I request the organizers that Preeti ma'am can come and join in and then give her and offer her address. By that time, let us not delay the technical deliberation. Let us start with the technical deliberations. With these words, I hand it over to the committee personnel. Thank you very, very much, friends. Thanks a lot.
Uh, Good evening, everyone. So let me start with the profile of CA Lakshmi Rao ma'am. So Lakshmi Rao ma'am is a seasoned chartered accountant with over 34 years of experience, specializing in forensic audits, including cryptocurrency frauds investigation. As a senior partner at a leading CA firm, she worked with top government agencies, financial institutions, and MNCs, leading major fraud investigation cases across various industries. So, let me welcome CA Lakshmi Rao ma'am for today's session on balance sheet analysis. So, over to you, Lakshmi ma'am. And please unmute yourself.
Thank you, Kirti. Thank you, Ravi sir, for a brief introduction to the session. I will now focus on the balance sheet analysis and financial interpretation and its interpretation financial risk instead of just ratios. Generally, we go into ratios. Now I'll discuss about the risks that we come across while analyzing the balance sheets. So I'll start with my presentation. Can Jasmine
Yes,
share
ma'am.
the presentation? Yeah.
Can you see the screen?
Yeah. Can you do it a full screen? The full screen?
Actually, it's a full screen.
Yeah. Thank you. I can see. So I will explain how first why we need to analyze a balance sheet at all. Who all will analyze the balance sheet and what is the purposes it serves for the analyzers of the balance sheet. So we'll go step by step and what are the challenges, what kind of issues we've come across while analyzing the balance sheets, and how do we address the financial risk, how do we interpret the financial risk, how we take the decisions. So now, why do we need analysis of the balance sheet? So balance sheet is required to be analyzed to understand whether it empowers the investors to make its decisions. Investors include individuals, companies, and also strategic investors who would want to be in the would be wanting to be in holding preferential shares or maybe into equity share capital, they want to contribute as a PE fund, or in any manner if they are trying to invest directly into the company, or if any company or FIs or individuals are interested in buying the shares in stock market. So they would definitely want to understand what is the company and what is its performance and its health. Likewise, the lenders also take decisions on balance sheet, its analysis, and the ratios and the risk that they would be taking while giving the loans. Likewise, the government agencies, the regulators also will analyze the balance sheets to take decision making, like while analyzing the regulators when there is any shares which are going beyond particular percentage up down scaling, and if there is any issues with any company, if there is any complaints from the investors, the regulators like SEBI, RBI, they will get into the balance sheets of the companies. Even RBI, being a regulator, will, while doing the bank audits, will take into consideration the balance sheets and analyze them to find the health of the company. And the competitors also use the balance sheets to analyze. So the analysis helps to interpret a company's financial risk by examining its assets, liabilities, equity, and allowing stakeholders to assess the liquidity, solvency, and overall financial health and make informed decisions. Those all we discussed above to take their decisions. These information is useful. Next, Jasmine, can you help me in? Thank you. So, how do we analyze the balance sheet? There are two ways. The approach to the balance sheet analysis is negative approach, positive approach, or neutral conception. What is negative approach to analysis of a balance sheet? A negative conception is describing about the risk or threat of a potential loss that a balance sheet will throw. So, understanding what is the potential threat for which we analyze the balance sheet. So, with a mind, maybe like investigators, like CBI, police, basically they will get into the analysis of the balance sheet to understand the risk what was there. Is it, even the regulators like SEBI, they will understand and try to identify any risks or there any potential loss. So this is an approach of negative approach towards the balance sheet to analyze the pitfalls in the balance sheet. Where is a positive approach? So to minimize any potential loss for the investors or any actions in order to stabilize the situation of the company, mostly the company management and the key management persons would do take the analysis in a positive approach to have a better ratios and all. Even banks would like to have a better ratios. So the analysis of the balance sheets generally they do to understand a better ratios and improvements upon those ratios. So not only they try to minimize the loss but also try to take advantage of undertaking risk. Some already undertaken certain risks. They will also try to understand how to improve the financial affairs of the company. So what is the neutral conception? Neutral concept suggests the risk is not only threat but it is also an opportunity. So now if you see the present scenario world across, the trade tariff war that's happening, so when we analyze the balance sheet, there are investors who look for a better company. Of course, there is a risk. There is a risk of the stock market volatility, but still they look for the opportunity, taking the calculated risk. So this is a neutral concept some investor would like to take at this kind of this type of risk which they are facing. So the risk means the possibility of obtaining results different than expected. So each and everyone has a different purpose for which they analyze the balance sheet. So next, Jasmine, can you help me? Next slide, please. Yeah. So nowadays, if you see the balance sheet, there is a schematic explanation how errors and manipulations arise in the balance sheet. If the balance sheet is there, if you see in income and there are expenses are debit, credits, revenues are credit. Many a times when we see there are revenues which are non-cash flows, when we prepare the ratios, the revenues and the expenses, we calculate the ratios. We require to understand these revenue flows, from where they are coming. This requires the understanding the director's report. It's not just about the balance sheet numbers to which we select, and we also have to read the revenues and expenses along with the director's reports and other notes to accounts. Likewise, when we see the balance sheet assets and liabilities have to be analyzed along with the revenues and expenses, which I will explain with a few examples in my next slides. Actually, the balance sheet analysis is a very big task and a very big topic as such to explain, because I've been given any topic just a few hours back. I am trying to uh, explain these things now in a short time. So now I am showing an example of a balance sheet in which, if you see, there is a capital work in progress of 412 crores. Can you see? It is as on 31st March 21, and as on 31st March 22, it is showing 412 crores work in progress. Can we go to next slide? So if you see in the same balance sheet, there is a fixed assets, plant, machinery, everything. Here, as per our standards, we are supposed to show the capital work in progress also. But there is no such item in this note number 2 that the balance sheet is having. So what is it saying is, the balance sheet is showing work in progress, but in the details that they are given in the annex, the notes or in the schedules, the such item is not visible. For your information, in the next year of the balance sheet 2023, that capital work in progress is totally from the balance sheet is evaporated. It is not there at all. So it is not even being capitalized. So when we analyze a particular year of the balance sheet, we are supposed to understand along with 2 years minimum balance sheets of the previous years and current year. Put together, we have to analyze one single balance sheet for one single financial year. Analysis will not lead us to any inferences or any conclusions to draw about a company. So we need to see more than 2 years minimum, 2 to 3 years, to understand the balance sheet. So next slide. Yeah. So what are the types of risks we have? Financial risk is a type of threat, can result in a loss of capital to shareholders, are everywhere and impact us in several different ways and sizes. This risk, financial risk, and one should be aware of all the financial risks and understand the threats and protect ourselves. This won't remove the risk. By understanding the risk, analyzing and understanding the company, are we free from the risk? No, we are, risk is never zero. We need to understand risk is never zero. So this is only minimize the risk and minimize the our harm because of whatever decisions when we take as a investor or as a lender. When we take a decisions, this will reduce the risk that is being exposed by them to the so we need to have a proper understanding in the analysis of the balance sheets. Next, yeah, why understanding financial risks are important. The possibility of default, this is from the perspective of banks, I have written here. The possibility of default on advances, but may also experience failure in repayments, which causes a financial burden on banks, that is lenders. So when banks analyze the balance sheets, they have definitely need to know those who have already lent money to these companies or those who want to lend the money to companies in future. While they analyze, they will have to see the strengths and weaknesses and the financial risks that the company may have, because of which the advances given to the company by the banks, is there any possibility of default in future, in near future? Is the cash flows are supporting for such future repayments? And is there any experience of failure in the repayment of previous years or current year or any last quarter? If it is a listed company, they have to see the quarterly results and they have to understand the balance sheet and understand, is there any financial burden on the banks by NPA and there is no cash flows which they are projecting in their banks balance sheets. So that could jeopardize their income or ability to give fresh advances. For banks, particularly, if the advances are given and if the repayment they are not receiving, this is a direct effect on the result on the income of the bank. So the banks are supposed to regularly analyze the balance sheets and see the liquidity and the cash, the solvency ratios and liquidity ratios to see whether they are in a position to pay or not. The possibility of sectors or large corporation defaulting that results in wipe off of huge income and advances. So the banks, if with the recent experiences, we can see so many big companies who were rated A by credit rating agencies slipped into NPA and then they defaulted the repayment to the banks. So if you see, it has affected the income of the banks and also it has resulted in several sectors of industry where these big large corporates, like you see the Bhushan Steel, which is one of the big industry which fell down, which once upon a time is A graded. So the result is the huge income of the banks and the advances portfolio of the banks are wiped off from the balance sheets. So yeah, next, Jasmine. Yeah, how do we understand financial risk? From internal factors and from external factors. The internal factors are the developments within the company. So, how do we see and where do we see these internal factors of a company? What's the development? Generally, this is being not generally in during the year, probably we may not come across. But when you see the balance sheets, when you see not just the balance sheet numbers, balance sheet, P&L, notes to accounts, it's not just that which will tell you about the company. If you read the company secretary's report, if you read director's report attached along with the balance sheet in the annual reports, you can see what is happening in the company is being commented by the directors. If you read carefully, that will show which projects they are on, which projects they are stalled, which projects they are getting new, and what are the challenges they are facing, what improvements are they facing. Apart from this, the public domain information also, you can search about the company. You will see what is happening in the company. Generally, they come out. And also, if you see SEBI website, the listed companies mostly they will, if there is any major impact on their income, that is their revenues, they do report to the SEBI. So if you carefully read these things, what's happening inside the company, which affects the income, revenue, and the business, can be estimated. So these are not shown as such in the balance sheet numbers. So this we need to understand along with the numbers that are in the balance sheet and the P&L account. So internal factors can be understood by analyzing financial statements, annual return reports. Actually, returns is wrong. It is report, and the director's report, notes to accounts, auditor's report, and the data file documents filed with the ROC, and in the particularly in case of bank, it's stock statements, etc. When we are seeing the bank audit, then we need to see stock statements. I insist on stock statement whenever somebody does the bank audits. That's a pulse that talks about the company's performance. So this is not being reflected anywhere in the balance sheet. But however, when we do bank audit, we need to understand the stock statement, read carefully. That will give you the pulse of the bank company. So these are the internal factors of the company to understand the financial risks. Then coming to external factors. External factors are political, economic, or social conditions that affect the company's performance, such as economic crisis. You have a demonetization time. You have issues with some companies. You had COVID situation where the companies performances mattered. Some companies also wiped off. They closed down their businesses during COVID. They could not sustain. And also, if you see presently the across the globe, the tariff trade war is happening, based on which companies have the effect on their revenues also can be understood through external factors which have impact on the balance sheets and the industries across the globe. Next slide. So, how do we understand the financial statements? Understanding the external factors affecting the financial statement. Likewise, if you see the cancellation of 2G, if you see the cancellation of coal licenses, if you see present the US tariff, if there are any change in the government notification affecting the company top line, any direct or indirect effect on financials due to changes in the government policy. These are the major areas which affect the financial statements. So financial statements in the sense mainly the revenues initially, then automatically that will reflect on the other areas too. So these are the some of the external factors which affect the financial statements, which are supposed to be understood to understand the financial risk while analyzing the balance sheet. It's just not the numbers. So early effect of these changes happen whenever there is a external factors that affect the financials, that will show first on stock markets if they are listed. If they are private, they are not shown in the stock markets. But if you see the stock statements submitted to the lenders, you can see the reasons, effect of that, because they cannot have more stocks. There can be having non-moving stocks because of no sales or reduced sales, and there is a effect on demand, supply, and stock statement submitted to the banks, as I told already. And also, if you see the effect of the transactions in the cash credit accounts and current accounts were maintained with the lenders. Reason being, if there is no revenues, there is no cash inflows that is can be seen in the accounts maintained with the lenders. So mostly those auditors, these can be seen only by those who are seeing the banking transactions. People sitting outside the bank cannot see these effects, but those who are doing the audit should analyze these along with the financial statement analysis. Next slide, please. So how do we understand the financial risks? So every increase in the liability is not necessarily have equal increase in assets. This one need to understand. Whenever we prepare a balance sheet, when we are studying as a students, we must have done as a CA, we must be preparing the balance sheets and all. But we need to understand while analyzing every liability that increases, there is an equal increase in asset, we read, we understand like that. But it is not necessary. If we see unpaid interest, which is a liability, suppose there is a bank loan and there is a liability to pay interest and that interest is not paid. But unpaid interest does not increase any asset in the balance sheet. If you see the unpaid interest in the balance sheet in the liability side, which increases the bank loan amount, do we really see any increase in the asset? We don't. Why? There is no asset as such, because it is a liability increased, so this liability is increased only on the liability side. Why? Because the interest that is to be paid is shown as expenses in the profit and loss account in the expenses side. So my profit is reduced to the extent of unpaid interest, which is already debited to P&L account. My profit is reduced. So this reduced profit is affected in my reserves and surpluses in the balance sheet, which is also on the liability side of the balance sheet. So if the balance sheet side liabilities is increased, when my profit is reduced, my reserves and surpluses has a negative effect, and my loans, which is also a liability, the unpaid interest is increased. So my two side effect is balanced in liability side only. There is no effect in the assets. So we need to analyze carefully. This is not reflected in ratio analysis. When we take out the ratio analysis of the balance sheet, this is not reflected. We have to understand the item wise in the balance sheet, how it is increasing or decreasing. So is it supported with an asset, or is it supported with an decrease in my profits? Because my profit is also on the liability side. So my profits are reduced, I am not paying my interest, because of which my profits are reduced. So likewise, if every increase in asset is not necessarily have equal increase in liabilities. So when suppose if I am buying an asset, plant and machinery, do I have effect in liabilities? Not necessarily, because that could be something different. If my receivables are increasing, then is it necessary that my debtors are increased because my revenues are increased, which is reflected in the P&L account? Are we comparing that way? That is the standard way of comparing. But if that is seen, and if I am ignoring my loans and advances and reading along with the increase in the loans and advances with the notes to accounts, all three together or maybe four together, that is my debtors, my loans and advances, my revenues and notes to accounts, if I read together, I can understand debtors converted to loans and advances, which has both side effect on asset side only. We have to understand this. Debtors are not reduced because there is a recovery from debtors. There is a cash inflows from the debtors because we realized from debtors. No, there are many a times we come across where debtors are converted into loans and advances, and this is being reported in the notes to accounts, which we need to read along with the ratio analysis, also with the understanding the P&L account, the revenues and all. So just increase in one side need not necessarily have a equal opposite side of the balance sheet. So we need to understand along with not just the ratios, but along with other items in the financial statements. Next slide, please. So now we come to understand non-cash flow transactions. While understanding the financial statements, we need to understand there are several cash flows. Cash flow statements are prepared, if you see, but is every cash flow has a real cash or not need to be understood. We need to understand and identify the non-cash flow transactions which has effect in the balance sheet. So as I told you in the previous slide, the debtors are converted into loans and advances. But when we see the cash flow statement is prepared, debtors increase in debtors, reduction in debtors, we do show in the cash flows. But do they really have any cash that is coming into the bank? Is it happening? No, it's not happening. It is not it's a non-cash flow transactions, but still we are showing it in the cash flow statement. So this we need to understand carefully. Having a good cash flow, having a good reduction in the debtors, but having a good revenues, still how a company can be cash crunch, has a cash crunch status, insolvency status, how it can have, because of some of these reasons. One of that is by having no cash flow transactions that affect the balance sheet is maybe debtors converted into loans and advances. So there is no cash flow, there is no recovery, there is no possibly there is something to understand in the revenues. So we need to see other places in the balance sheet to understand these areas, this one also. So similarly, you all know deferred revenue expenditure or asset are in many balance sheets are huge numbers. You'll not believe I've come across balance sheets which has running in crores, 3-digit crores in deferred revenue expenditure or asset. Does that really mean any cash flow is there from that? No, it's only based on certain accounting standards and accounting principles. We have arrived at that deferred revenue expenditure, but which has no cash flows. So having this much asset, say you have a deferred revenue asset, but still we say company is in trouble and it slipped into NPA. How is this possible? It's possible because it has no cash flow. This amount is not through due to cash. So increasing in borrowing due to restructuring also, if you see the bank restructuring processes, many a times, if you see the latest COVID scenario where banks have restructured many outstanding balances, spreading the repayment period based on which they have shown in the balance sheets. So the restructuring will keep you current and non-current liabilities. So current liabilities, that is just 12 months when we reclassify the liabilities or the liabilities in current and non-current. If you say 12 months, if the bank is not asking us to pay, they're restructured over 3 years or 4 years. So my classification will change, current and non-current. Not necessarily that is comparable with the previous year and is not based on the performance of the company. It's not based upon the performance. It's because of the restructuring that has happened by the bank, which has given the facility to repay in a better or in a comfort position or spread over the next few years based on their other challenge and the other aspects in the company. So we need to understand this restructuring, because of restructuring, the classification that takes place in the balance sheet needs to be understood that there is no cash inflow or outflow against these items. Likewise, invoked BG and LC. Suddenly invoked BG and LC is a non-fund based facilities given by banks to the companies. So they only report in the notes to accounts in the balance sheets. They are only disclosures. So if this disclosure is not read with the balance sheet, again our risk is increasing just by writing down the ratios, just by understanding the balance sheet and P&L and L and the schedules is not sufficient enough to understand. This year there is, say, last year there is a disclosure of, say, 100 crores BGLC exposure of the company to various banks. So maybe the company has gone into NPA and then continuously there is a invocation of BGs and LCs. Then to the extent of invoked BGLCs will sit in the balance sheet as a liability in the next year, very next year. So when we see last year was so much lesser debt, this year higher debt, what could be the reasons? Where do you analyze this? Where do you understand this? They have company is been it is been continuously disclosing the fact that they have these facilities somewhere, but we looking into it while we are analyzing the ratios. So suddenly some debt has increased in a particular year. So how is this possible? Did they borrow? No, they did not borrow. This facility was already there. So while analyzing the risk, whether to invest, whether to buy a share, or whether to give further exposure by lenders or all, we need to understand these things together, just not by the numbers. Next slide, please. So coming to old cash flows but effect given now. You all know when we finalize the balance sheets, many a times we give effect now in the balance sheets, which are taken place in the earlier years. So we do write in the profit and loss account when we write off or when we receive or anything that happens for the old transactions that we are giving effect now has no cash flows. They are zero cash flows, but these are affected even in our cash flow statements. So what nature of such transactions are there? When we write off the assets, when we write off the CWIP or debtors, loans and advances given earlier, these transactions has no cash inflow. Likewise, writing off may involve diversion and siphoning off also. Many a times it do happen. The debtors' receivables are never being followed up or were only used to inflate the revenues. These are written off. So we need to understand who are the debtors which were written off. Are they related parties or are they unrelated parties? And since how long they are sitting in the debtors, we need to understand. For this, we need to definitely go back to at least 2 to 3 years of my previous balance sheets to understand the current balance sheet and why there is a write-off and why if particularly there is a CV which is written off, definitely one has to see. I have come across many companies' balance sheets where the related party debtors were written off. Even investments were written off which are in the related parties. So why are related party investments are written off? So need to understand the balance sheets of those related parties whose amounts are written off. Many a time now, the as per the amortization also, there is a write off or there is a provision created. So when there is a provision created, amortization also is a non cash flow item which reduces the profits. So we need to see exactly the profit is not the one number which we can see in the profit and loss account, but how we have also to see other items which are affecting the profit or loss in the P&L account. So possibly there are other than depreciation, there are items like write-offs which are affecting the reduction in the profit. But there could be a possibility that the company is doing good, but there are other reasons why, because of which they are writing off. So overseas subsidiary has a problem, so they have amortized investments there. Then company in the country is not affected, except that the profit is being in the consolidation, profit is being affected. So we need to understand all these along with the numbers. So unsecured loans, ICDs written off, and conversion of one party liability to another through journal entries, these are all affected through non-cash flows. Next slide please. So common pitfalls to avoid when conducting balance sheet analysis for credit risk management. Mostly whenever the banks or the lenders analyze the balance sheet, they do surface level analysis only. They don't go into details of the other points that are being disclosed or notes to accounts it is being reported, or auditors comments, auditors report and auditors notes, and also the directors reports that are not being considered. They don't rely on numbers alone without investigating underlying factors and trends. So we need to understand the underlying factors which are affecting the ratios. So many times ignoring qualitative factors taken into account industry trends, market conditions, and management capabilities. If you remember the 2G cancellation that happened, because of which so many companies have just had to close their shops. Many companies, you are all aware, it has effect on many other companies which are not related just to 2G, but also those companies which are engineering, who are prepared, who can make the towers, who maintain the towers, who provide the other services to maintain the tower, construct the towers for the 2G and all those companies which are involved, connected to with this, were also affected. So we need to understand the industry trends. Now presently everybody can see the tariff war, that we can see which industries are all affected. Maybe you can see most affected vehicle spare parts, more affected are so there are specific industries which are affected. Is the company which we are analyzing, does it have any exports to US? Does it have any exports to other countries which are non-US? So these are all the things which we need to understand before understanding the analysis. If we ignore this, there is an issue in analyzing the balance sheet. So the market condition and management capabilities, many a times we see nowadays the companies are purchased through resolution in NCLT. So the company's name, everything is same, factory is same, balance sheet is same, everything is same, but the management has changed. So if we are investing, are we going with the same mental status or understanding about the company in the previous years and the present company, how the new management is taking care? So is going to take care in the future. So where is that disclosed? Where the management is changed? Is it disclosed in the auditor's report? No. Is it disclosed in the notes to accounts? No. Is it disclosed in the balance sheets? No. Because all the numbers do carry over to the next years. But change in the management is reported somewhere else. That is in the director report. So we definitely need to understand if the management is changed. So how much time it may take to revive, how much time it may take to go into positive from negative if probably because of which the company slipped into NPA and then NCLT. So we need to understand those also management changes and their capabilities. The new management capabilities also matters before analyzing the financial risk in while analyzing the balance sheets. We also commonly neglect to consider industry norms, growth stage, and unique circumstances. If you see, recently we have come across the airline industries where common issue was their engine failures. So across the industry there is an issue of engine failures. So if we see the revenues of the airlines, is it coming down? The reasons also we need to understand. Is there any growth? Are they adding any flights, new fleet? So these are all unique circumstances, unique times when we have to understand will that have any effect on the balance sheets. I'm done with, ma'am.
Yeah, ma'am, you still have 5 more minutes if you still want to continue.
That's fine. My PPT is so that's why I asked. So I'm in the last slide anyway. Hello.
You wish to continue?
I am in the last slide, so that will.
Okay.
Yeah. My PPT is not cannot be seen. So anyway, I will conclude that. While analyzing the balance sheet, I insist on whoever analyze the balance sheets for understanding the financial risks. We need to not just understand the financial ratios, but we also need to understand the other aspects of the financials. We are in the last slide, more or less. So, yeah. So, common pitfalls I have explained. So, it has evolved nowadays. It is even done with the fintech and automation, AI and machine learning algorithms also give the ratio analysis. No need we to physically or with the numbers we have to handle. It is giving on its own. So identifying anomalies also it is giving, but however, no machine can beat a person, a human mind. So we need to definitely see, in spite of AI and machine learning facilities that we have latest, we need to understand other things of the industries which I explained in detail, other areas which need to be understood while analyzing the balance sheets for the financial risks. How do we interpret these risks? So if you have any doubts or anything, you can tell. Thank you for listening patiently.
Thank you, ma'am. I think we'll take up some questions which are posted by our participants. So not much. Coming with one of the question, if you can throw some of light on maximum unsecured loans for a proprietary firm. Ma'am, you're mute.
Yeah, unsecured loans of a proprietary firm you are asking about, understanding the analysis. So unsecured loan is generally taken not from the banks but from maybe hand loans, or this is a very risky area actually. So this we need in proprietary. There is no other third party confirmations like auditors reports or any notes to accounts nor any other things supporting those numbers. So definitely the unsecured loans are to be understood thoroughly before understanding the company's balance sheet, because even many a times the entries are taken just to pass on through the bank account. Not necessarily these unsecureds are really uh, actually taken and used for the business. So that needs to be understood. Just not unsecured loans, reading it and having saying that that is being utilized in the balance business and benefited out of it is not the right answer, but need to understand further into these unsecured loans. That is a very gray area where you have to be very cautious while understanding the financials of the proprietary concern.
Another question derives is we made a provision for performance related pay for employees in 2023, but the payments are still not approved by the competent authority and is figuring as an objection in the audit report. Can you advise if the provision is to be reversed?
The provision is made, whether to reverse or not, that needs to be
Yeah.
understood with the management and understood with the discussions with the HR particularly. Reason being, are they intend to do really pay it or not? The heart of the thing lies with the intent of the management is to pay or just make a provision and keep it. And is the performance of the company is doing good? Is it available to accommodate that kind of expenses in the next 24 and 25 financial years also need to be understood. Then only a decision either to write off or to provide or to pay to be taken. So just as a head, one cannot decide. The status of the financials and the status of the business to be considered and discussed with the management to take the decision.
Okay. Another last question is what ratios are important to analyze the balance sheet for investment in stock market?
See, stock market, definitely, see, the ratios are all, if you see any company are already published. So you see the revenues over the capital and the debt equity ratios you see, and you particularly see non-cash flow transactions are there in the balance sheet or not, because many a time it gives a very wrong picture. So identify those non-cash flow items in the balance sheet and P&L, and also please read the notes to accounts, not just the numbers and the ratios. Revenues, yes, revenue ratios over the capital you have to understand. Also debt equity ratio you have to understand, and also you have to understand the current ratio. These are all standard ratios. You are all aware. Insolvency ratios. All these are all to be understood, but not alone. You have to understand. You have to understand along with some other factors which are already existing, possibly in the auditor's report or in the notes to accounts and director's report in particular. I would suggest even to go through that company related disclosures in to SEBI by their company secretaries or their board for the developments to take any investment in stock market. That is very important.
Okay. Ma'am, there is one more last question just come up. There are risk of debtors inflated and the creditors being shown less as mostly no confirmation is taken by the auditors. So can you elaborate on this, like what to be done?
Yeah, see, creditors, I will repeat your question. Creditors on lesser side and debtors on higher side. Is that what you're saying? Is this what is the question? What?
Yeah.
Okay.
So, debtors being inflated.
Debtors being inflated. We cannot use inflated unless we really understand it. So we are just going by the face of the balance sheet and we are saying the debtors are on higher side, creditors on the lower side compared to previous years is what we are trying to understand now. Probably the fact may be inflated, that let's not get into it. So now coming to increased debtors. The debtors on higher side, simply why debtors on higher side? Just observe the revenues over last 3 years and also see the debtors disclosures in the balance sheet, which they have to do more than or less than 6 months, they disclose it. Then again, they also disclose related party debtors, unrelated party debtors. Is there any increase in the debtors more than 6 months, or is there any increase in the debtors of related parties? That you please need to understand along with the increase in the debtors. So if the revenues are also increased in the line with the debtors increase, we need to understand this also. These four aspects first one understand, then see if there is any realization from because if you see the related party transactions, the increase is for example is supported with the related party sales and debtors, and if you see there is any realization in the related party transactions, they will show how much they received from the related party against sales. If you see detail, you will see against sales realization, did they repay? If they are not repaying, if they are not paying against their sales, there is an issue. If the creditors, when we compare along with the increase in the debtors, creditors, if there is an increase in revenues, you will all will agree there should be increase in purchases also. Say, for example, the company is doing sales. If there is an increase in sales, there should be a corresponding increase in purchases. Can it happen that increase in the sales and increase in the debtors is a good status, good ratios, but decrease in the creditors also is a good status, but is it really good? Is it a very good status as such? No. Reason, if my purchases are not in line with the increase in my debtors or in increasing in my sales, there is something to be doubted about it. Because why there are no purchases when there is an increase in sales? Probably your word using inflation could be the reason. So that is the area need to be understood. Now when we see the reduction in creditors, this can happen only in two situations. That is, one, paying off the purchases. But paying off the purchases can be checked along with the increase or decrease in the purchases. Purchases are increased and creditors are reduced, means they are paid. So if they are paid, from where they will pay? They will pay from the revenues that they get from the debtors. If the debtors are not reduced, but creditors reduced, means it is not paid out of the revenue realization, but it is paid out of maybe loans, bank loans, maybe from other things. And if it is not supported with the increase in the purchases, that's clear indication of possible inflation of the sales and debtors. So just the ratios are all, it speaks good in the scenario they explained. My revenue is good, my debtors are good, my creditors are reduced, good ratios. But no, this needs to be understood thoroughly.
Okay, great. So I think we complete with a question and answer. And it's my honor and privilege to deliver a hearty vote of thanks at the conclusion of today's insightful session. So I extend my heartfelt gratitude to our distinguished speaker, that's CA Lakshmi Rao, for shedding light on the critical nuances of financial risk interpretation through balance sheet. And her practical examples and analytical framework have certainly enhanced our understanding and professional outlook. So also to the organizing team and support staff, thank you for your behind the scenes efforts in ensuring the smooth conduct of this session. And finally, thank you to all the attendees for your active participation. We look forward to the continued involvement in future knowledge sharing initiatives. Have a great weekend ahead. Thank you.
Thank you.
Yeah. So we'll move forward to the next part of the session, which is on sustainable living. So I welcome CA Supriya Pednekar. So welcome Supriya ji. And before Supriya starts, I would want to introduce her. So Supriya has a 19 years of experience in corporate and startup sectors. And her expertise in CA and her love for the conscious living thing. She had worked on the Buddha site. Through her award-winning Design Your Life for Conscious Living program, she empowered individual to achieve a work-life harmony and personal fulfillment. So Supriya would speak about, how to have a sustainable lifestyle, how to be happy, how to balance your work and life. So over to you, Supriya, now. Supriya, please unmute yourself. Yeah. You're not audible. Still not audible.
Is it better?
Yeah.
Oh, thank you.
100%.
I'm just sharing my presentation now.
Yeah, sure.
Let me know if it is visible, okay?
Yeah,
Yeah?
it is. It is.
Okay.
Wow, wonderful. Again, your voice has gone, Supriya. We can't hear you.
Can you hear me?
Yeah, now we can.
Okay, thank you so much. And sorry for this disturbance. I'm not sure why there's a problem. Okay, so basically, I'll just elaborate little bit more on my own journey.
Voice has gone. Supriya, you're not audible.
Yeah.
Am I audible?
Yeah.
Okay. Yeah, I'll just reshare my presentation.
Yes, ma'am. Now it is fine, ma'am.
Yeah. Can you see my presentation?
Yeah.
Okay. And am I audible now?
Yes, you are.
Okay. So I have worked as a consultant with the Big Fours, after which I worked in startups. And through my journey, I was very fulfilled. I am fulfilled even now because CA in itself is a beautiful journey. It's a lot of learning and continuous education, as we are seeing in this session as well. But through and through, there is this inner longing for for more, because life has always been a want to know more for me, and that is where I also call myself a spiritual scientist, because I have been trying to understand what is more to life. That led me on this journey of being a well-being coach now, and I am also a facilitator with the World Happiness Academy. So the mission is here to, so that professionals and business owners across the world are able to embrace sustainable well-being and cultivate work-life harmony through conscious living. And the vision is that creating a world where everyone can thrive mentally, physically, emotionally, spiritually, one step at a time. Now, sustainable well-being. What is sustainable well-being? Before that, we need to understand what is well-being. The definition that is given on web is: well-being is a multifaceted concept that goes beyond simply being free from illness. It is not just the physical well-being. It reflects how we feel about ourselves and our life, our overall quality of life. There are certain components of well-being. The first one is physical well-being, which is about our physical fitness, our healthy habits, nutrition, and our fit body. But it doesn't stop there. There is a mental well-being, where how we are approaching each day, whether it is with a positive mindset, how are we able to manage the stresses of life, whether we are able to have a mental equilibrium. Mind and body, again, it doesn't stop there, because our emotions are at play all the time. Our emotions are the ones that drive us. While intellect and our physique is equally important, our emotions make us do actions or take actions. So here, our inner peace and the way we are able to express our emotions is very, very important, which has a big, big contribution towards our well-being. Social well-being, because we are social animals, and relationships and feeling connected and contributing to the society is a big part of our being. Financial well-being is something that, as chartered accountants, we all are working towards, and we are auditing financials. We are trying to understand how to understand financial statements. A lovely session taken by Lakshmi ji before this. And last but not the least, the spiritual well-being. It's about living with purpose, aligning our lives to our core values, and finding meaning in everyday life. Now, why sustainable is another question. If today I am feeling well, then why do I need to think about sustainability? And everyone in the world is speaking about sustainability right now. So, because well-being per se is not a 30-day challenge which we see online, right? It's a lifelong companion. We may learn certain things, adapt it, or try to use it for some time and then leave it. But anything that has to impact our life has to be integrated in our life. It can't be like a 30-day challenge. Secondly, life is dynamic. Today, if I have some aspirations, there will be life situations which will make me adapt to those. It is not like a straight line. Not like our stock market is, there are ups and downs. Likewise, life also throws like challenges. There are ups and downs, and that is the reason why our path has to be adaptable. Our techniques or our way of approaching life has to be adaptable. Goal here is not perfection, it is consistency. Small steps done regularly are much higher value than big leaps taken occasionally. If I want to be fit and if I start a journey in which I am actually working out 2 hours a day for a few days and then stopping it completely, then starting with 10 minutes daily and continuing it for a longer time will help me achieve better fitness. We are not looking for a break from life, but a better way of living life. It is art of living. Actually, it is a way of living. When well-being becomes a part of your living, it is sustainable. Now, sustainability is not generalized. It cannot be generalized. It has to be personalized because what works for you may not be what is working for everyone out there. Each one of us is designed differently. We have different experiences which have shaped us. We have different emotional thresholds. We have different IQs. We have different physical quotients. So the thing is that if someone is giving you a bundled service, say maybe like a consultancy service, which is common for all, it may or may not work for you. So sustainability has to be personalized. You need to audit your life. Like we audit a balance sheet, you need to audit your life to have a personalized plan. Last but not the least, your routine should energize, not exhaust. So if my routine is exhausting me and draining me, it is not a sustainable thing. Considering all these aspects, what we understand here is that if we are looking at well-being, while we saw all the areas of well-being, physical, mental, emotional, our social aspect, because we are social animals, our financial aspect, because we need to have concrete plans, at least when it comes to finances. The rest of the areas, life is very uncertain, but finances we still have in our hands and our spiritual journeys. So we need to design our life for consciously living and maneuvering through life with its ups and downs to have a sustainable well-being plan. Now, this is a wheel of life. When we look at life, at any point in time, we are looking at one of the areas. Maybe we are looking at our careers, we are very focused there, or our finances. Health takes a step back. Then we have family and friends. We have a romantic relationship with our partners. We have our personal growth because we are evolving beings and we have this urge and need of constant growth. The fun and recreation, which is equally important because relaxation actually empowers productivity. And our physical environment because we are actually juggling between our home environment, then our work environment, and different environments that uh, we are exposed to. So when we look at life holistically as to what are my career aspirations, what is the financial success that I am looking out, what is the health, what exactly is the health, what exactly does health mean to me? Is it vitality? Is it energy? Is it being able to get up early in the morning with that bright smile, or looking forward to the day with that same energy through the day? Whether I'm able to have good relationship with my family members, my relatives, my near and dear ones, whether I'm able to have that connect with my partner, whether I'm able to share that space with my partner while I am also succeeding professionally, whether I'm growing professionally, whether I'm enriching myself with continuous education, the right education, which is relevant at this point in time because our entire different industries are getting disrupted. We have AI coming in. We have so many changes that are happening. There are so many layovers happening. So in this kind of an environment, am I adequately uh, educated to continue to serve the current market? So all these factors are life audit. Like we saw debtors, assets, liabilities. Likewise, when we are looking at life, when we look at life holistically, we are able to analyze or at least come up with some sort of inner journey and inner pathway which we can work upon. Otherwise, there are so many distractions out there. it is very easy to get lost. Too much information. We are living in an information age, and actually we have to bring more focus to where we want to go in this entire domain. Rather than getting exposed to too much, we need to narrow it down to what we want and then follow that path. Now, there are challenges that we experience in life. What are these challenges? These are life situations. Like, even if I create a concrete plan, how will I be sure that I'll be able to make it? There are life situations that bring challenges on a personal front. What kind of challenges it could be? Financial stress. I want to start my own business, but I have financial stress. I am really successful as a professional, but I am having a lot of relationship challenges. I'm really successful when it comes to finances and my business, but I am having a lot of health problems. As a parent, I'm not able to give adequate time. There could be grief and loss, which I'm not able to cope up because of my work pressures. The home environmental issues, relations with loved ones is actually, it is actually spilling over to my work productivity. These could be things that we do not have control over. Likewise, there are other challenges. It could be overwhelmed because of intense workload. It could be career demands vis-a-vis family demands as well, because of maybe taking care of your elderly folks at home, or parenting, or some other demands from your personal life. Anxiety triggering because of uncertainty, what is happening all around. There is AI which is taking over so many jobs. However, for CAs that is not an issue, but for other professions, yes, definitely there is a lot of turmoil. Communication barriers. People are not able to express or be vulnerable with their loved ones, or even in professional relationships. The way people should share uh, uh, and care for each other, that is not there. Maybe that safe environment that is required for communicating your ideas, for it to be receptive, is not there. There could be motivation dip because you're feeling disconnected or uninspired. There could be lack of clarity in goal, where personal and professional goals are not set right. Like, there could be, like, if you are joining a new company, your KPIs are not rightly set, and there are multiple managers whom you are reporting to. Then need for recognition is there, but that kind of recognition is not available the way you want to be recognized. Physical well-being. You have all the time, but you do not have the energy. Now, how to find that energy? Procrastination patterns, because your mind is used to procrastinating things which you find is less important. However, you have not even looked at the importance or the priority of that particular area of your life. Job security, again, because of the changing landscape, there is so much uncertainty. Then people are looking, while they are working on in certain areas, they are looking for growth and more purpose in their work. So they are looking for change in job. And jobs are also evolving. There are new roles coming in, like chief well-being officer is a new role that there is. There is ESG coming in. So there are so many consultants who are now into ESG. So the entire world is moving in a direction of sustainability, and there are so many changes that are occurring. And resilience is something that is required in this entire phase. Culture. Inclusive culture is something which was missing. Now, because of the social aspect of ESG, even this aspect companies are taking care of. Emotional resilience, that is ability to bounce back from setbacks, and positive outlook, that how each day you are able to get up and do the regular routine things that you are doing. Now, having spoken about the challenges, there are life challenges at personal front and on professional front. There are now, but when you look at life, we can divide it into few components, to make it less complicated, because problems are there, challenges are there, But if you look at it that way, as a broad array of things, it brings overwhelm. But when you look at it as you and the environment, then it becomes slightly manageable. Because in this there are just two components, and you are the constant. You are being exposed to an environment, and that environment is impacting you. And that exchange is happening on a continuous basis. You are getting impacted by the environment, you are also impacting the environment. Now, in this, you is the most manageable factor, isn't it? Because the environment is not as much under our control. While now, with the government and corporates uh, requiring to fulfill ESG, that is environment, social, and governance, there is so much which people are looking at from a sustainability perspective that will impact us as well. But as a unit, as an individual, when we are looking at life and when life throws situations, how do we approach life from a sustainable well-being perspective is what we will look. Where going forward, we will discuss certain scientific principles as to how external situations and how our mind functions, how external situations are impacting us, how perceptions are getting formed. And this education brings more awareness when we witness these situations in our life, and we get the ability to respond to life rather than to react. There are as CAs, we must many of us experience overthinking, many of us experience their worrying pattern, many of us experience anger issues. There are anger issues. I've seen a lot of CAs and a lot of professionals experiencing anger issues. The reason is that you don't feel in control. And as professionals, we are used to controlling things. We are used to being in control, trying to audit, trying to bring efficiencies in our professional domain, and that percolates in our personal lives as well. So how do we manage that? So that for that, let us first understand as what is state. Okay, state of being as a person is the state of my 80 billion neurons and my 60 trillion cells in my body. The 80 billion neurons are the brain signals to the body to perform the function, and the cells are the workers. Neurons are the leadership and cells are the workers of this body. And our psychology and physiology together create our state. Now, to understand it better, there are two types of state, and we all have experienced both type of states. One is a positive state or a resourceful state, which is where we are at peace, we are happy, joyful, we are confident, we have clarity, certainty, we are in good health, we are having the love of our lives. Or we have experienced negative states such as stuck state, unresolved issues. There could be conflict, bad memories, phobias, fears coming in, guilt, hurt, grief. Now you would have seen that there is also resourceful and unresourceful mentioned along with positive and negative. What does this mean? So what it truly means is that each one of us has the capabilities, the skills, the knowledge, but if we can access those skills, capabilities, knowledge when we are in resourceful state. Have you ever experienced, and I'm sure you must have, that your friend is going through a challenge and you are able to give them a solution, but when you are going through that same problem, you are not able to think it through or not find a solution for the same. The reason being, during such time, our thinking capability is affected. When we are in negative state and unresourceful state, our thinking capability is affected. Our prefrontal cortex, scientifically, our thinking mind, it is affected. And we are not able to think clearly. And that is the reason why when we are reacting, the reaction occurs and we later on feel guilty about what happened. That is because at that point in time, our body is in an unresourceful state. We can't think clearly, think through. And that is the reason why reactions occur. Now, thoughts are a very, very big part of our living because as professionals, we have to think. But there are other thoughts also which keep coming along with the active thinking that we do. let us understand certain facts of this area. So our mind, we have around 60,000 thoughts in a day. And most of these thoughts are repetitive. The same thoughts that you had the previous day, you will have similar thoughts each day. But there is also a negativity bias along with it. Negativity bias is that our brain is wired to focus on threats. And this has occurred from our early age when we were in cave age, when we were yet to be evolved. At that time, our mind was uh, structured in such a way that any external threat or predators we need to become aware of. And that same mind has evolved, but the thing is, it has not evolved to such an extent that we are able to think positive through and through. So what happens is that any external situation that is occurring, like say suppose your senior is giving you a negative feedback, the thing is that immediately you feel threatened by the same. You feel that, oh my God, what is this person saying? Am I not doing my job properly? And that is the natural reaction that our mind has because our brain is negatively biased. It perceives external judgments as threats. And this is just to keep us safe. So this entire way our brain was designed, it was to keep us safe. So the intention was always good. But the thing is now in today's day and age, we don't have predators waiting outside. Our normal situations are also perceived as predators. And that is the problem. And emotional impact, what happens is that one comment can override multiple positive, one negative comment can override multiple positive ones. We have great relations, but one negative comment can actually take away all the goods that have been done, right? And this is like one thought, each one of us must have experienced that one negative thought can trigger a loop of a series of negative thoughts. Like if I'm thinking positively and I'm doing my work, and if something occurs which is not as per what I truly I like or I want in my life, then what happens is suddenly a negative thought occurs. Oh my God, why did this happen to me? And then there is obviously a thought is followed by an emotion, energy in motion in our body, which is a feeling like say a twitching feeling in my stomach, and then that is resulting to another memory. Oh my God, this had happened to me before also, and that thought emotion loop starts, and it takes us on a different trail altogether. Let me explain it to you in a very simple way how our mind is perceiving events. So any event that is occurring, we are consuming that event through our five senses, through visual, auditory, kinesthetic, through smell, and through touch. Now, what is happening is that every event that is happening, even now, right now at this moment, you are perceiving it visually, you are listening to it. There are certain feelings, good, bad, you're liking it, not liking it. Maybe you're feeling it is a waste of time. Maybe you're feeling, wow, it is a good investment for time. So those thoughts are there, those emotions are there, and that makes us do things what we do, right? And there is smell and touch. Now, while we are taking this information, there is deletion happening, distortion happening, and generalization happening. Now, what is this deletion, distortion, and generalization? If you would have seen brain, a thinking person and a person who is actually doing a lot of physical labor, if a person is thinking for 12 hours and a person is doing physical labor for 12 hours, who do you think will be more exhausted? It is the thinking person, because what happens is our body consumes more energy in thinking, and that is the reason why our brain tries to conserve energy by deleting, distorting, and generalizing things. And that is how we find meaning in the situations outside ourselves, so that we can use that as a reference point for our future conversations or our future approach towards life. Now, in this, what is happening is deleting. Deleting is ignoring the things that you don't feel relevant. Distorting is by coloring it through our own beliefs, emotions, and assumptions that we have about a particular situation. And generalization is then putting it under broader buckets, where conclusions, we draw conclusions that this is how it happens. Okay. So this is the way our brain functions, and then we have a reality that is our perceived reality, our personally received reality, which is a filtered version of the actual reality, which is not the truth itself. Now, this deletion, distortion, generalization happens when the brain is actually receiving information. It is actually going and tracing the information field of our body, where there are memories, there are subjective experiences, there are our perceptions, the scripts, the stories that we are telling ourselves on a daily basis, the imprints. These are the things that actually are creating generalization, so that later on we don't need to think much about someone. So have you heard about creating the first impression? So that event occurred, a person came, approached to you, you have actually seen that person visually, heard that person, felt the presence of that person. You have created certain assumptions that, oh God, delete as in you don't like this person, distort as in, okay, maybe I'll meet this person a couple of times to see if I gel well with this person. And generalization is, okay, yes, this person is good for me, or maybe like keep this person aside, I don't want to meet this person again. So all this happens in a fraction of a second. Our brain works that way, but this is happening. And that is the reason why we have to have a reality check. We need to have an audit. We need to see if the reality matches with the perceived reality, that the stories that we are putting in our minds and our bodies. Once we perceive, then a state is formed. So suppose giving you an example here, the event one here could be like a person, a female who's like a mother, a parent, and she's got this great opportunity of presenting on a very, very complicated topic which she wants to deliver. And she prepares for that, but somehow urgently there is personal, there is a parent teachers meeting the same day and she's not able to create the presentation to her own satisfaction. Now what happens? What happens is that when she is in presenting in front of the audience, the members, at that time she is constantly judging herself, and she is also thinking that others are judging her. Now what happens is that in that there is a lot of deletion, distortion, generalization, because she is also going back and checking her past memories. Maybe she got such opportunities which she couldn't deliver to her best. So this actually has created a state inside of her which is of a victim consciousness. She is now feeling the victim of the situation because she can do better, but the situation didn't permit her to do that. Now in this, that action happens. If I am feeling bitter, I will act differently. If I am feeling better, I will act differently, right? So actions occur how verbally or non-verbally, and then it results into the situation, which is life, which could be desired or undesired, which could be a happy, healthy, and wealthy person, or it could be through sickness, broken relations, or overwhelm. Understanding this helps us to become more aware about what is happening each and every moment of our lives. And reality check is required. Having said that, we will move to a very important area, which is our minds and body are one system. Now that we understand how our thoughts are impacting our reality, how the thoughts are constantly generated, and we are more negativity biased because of how our brain is structured, how we perceive external situations, let us now see mind and body are one system. What does it mean? Mind and body are one system. Let us understand by managing one event at a time. Okay. So when an external situation happens, we can look at that situation and then look at what am I thinking about it. There is a self-talk that occurs. You would have experienced this, that if something is happening in your life, then you are actually verbally narrating something inside you. There are certain body signals. If I don't like a person, I feel like uncomfortable even being in the presence of that person. There are body signals. So when you are experiencing such a thing, when you are experiencing worry, anxiety, when you are experiencing overthinking, just take a step back and notice your thoughts. What is happening? Most of the thoughts are on autopilot basis, because as we know that those are the regular thoughts that we had the previous day and the day before that. So what am I feeling? And what am I thinking? And is it true? This question of is it true actually clears away the perception that is created in the first place, because that perception may or may not be true. Because if I have analyzed the situation as this person is this way, or this situation is bad for me, I have analyzed it based upon my state of being at that point in time. But now, if I take a step back and if I just ask myself, is it really true? Because we know now that the brain functions in a particular way and it has a way of generalizing, but the generalization may or may not be true, right? So this is the first step to understand how mind and body are one system. Second is name it. If you're experiencing an emotion, then don't label yourself as being that. Many a times it so happens that if you're feeling angry because of not having control over situations, you feel that we say this statement very easily that I am an angry person. But it is not the case. It is the feeling that you are experiencing at that point in time. We need to cut some slack to ourselves and not judge ourselves on a regular basis. So what happens is when we label our emotion, we are actually separating us from the situation and looking at it objectively rather than defining ourselves or labeling ourselves or being a person who is fearful, being a person who's anxious person or irritated person. So let us not label ourselves or let us not label someone else, because what we are doing is the emotion that the person is experiencing right now, we are labeling that person to be that emotion, which is not the case. One person is not sad everywhere or not happy everywhere. And we are dynamic beings and we experience variety of emotions through and through. So let us just look at ourselves and the people who are in our lives, our loved ones, in the same lens. Now, mind and body. So breath is a very important aspect of creating or connecting with oneself. Now, how so? While everything changes, breath also is a new breath every moment. Now, what happens is that you must have seen that when you are anxious, your breath changes. When you're happy, you breathe differently. When you are relaxed, you breathe differently. So, the mind and body, any change in it is getting affected by the breath is getting affected by the change in our physiology and our psychology. Why so? Because when we are experiencing a difficult event, what happens is our parasympathetic nervous system gets triggered and our body becomes relaxed when we are breathing normally. But the moment we are anxious, our sympathetic nervous system, which is the body's flight and fight mode, that gets activated. Our immune system gets suppressed, digestive system gets suppressed, our liver secretes a lot of sugar in our or glucose in our lymph so that we can take the action. And which is actually not happening because the external threat is not a threat at all. It is a perceived reality which is playing inside ourselves. So what happens is the moment we realize that and we shift our breath and bring it to a normal deep inhalation and exhalation, our mind and our body will relax. Breath has the power to change the psychology and the physiology inside us. That is the reason why many meditation techniques and other techniques speak about focusing on our breath, because the moment we focus on our breath, we are actually bringing more calm and relaxation to our body and our mind. Movements also help, because when we are energy builds up, we talk about mind, that is the thoughts. Then we spoke about the breath, which is the connector which changes our physiology and psychology. And then comes the movements, because what happens is we are energy beings. If you see, we are fully made up of atoms. Our body is changing every microsecond. Our skin is changing. Our organs are, our cells are dividing and multiplying, and we are completely new every moment. Now, what happens is if we are feeling, say, anxiety, if we are feeling stuck energy in our body and we shake or we go for a walk in the nature, what happens is that we are actually shifting our energy. We are coming to that space of releasing that energy which we don't want, and we have more relaxed and mindful energy within us, where our brain is more clear and we are able to be resourceful. And last but not the least, you have a choice. So what happens is most of the time, because we are in such a hypnotic state that external situations are driving us, we are not even thinking it through. And in such situations, what happens? We lose the ability to even see the choice that we have, and we just react to the situation. So what happens is the moment we take a step back, we change our breath, we move a bit here and there. We are not labeling ourselves, but labeling the emotion. We are now looking at the situation as separate from us and looking at it objectively. We are able to look at it as a whole, analyze its parts, and we then can choose our action. We can respond to the situation than react. We then move out of the animal consciousness that we are wired to human consciousness where we are more aware and we can make choices in our lives. And then one more important area here is that mind and body are one system, not just the breath, not just the movements, but our smile, our posture is a big defining factor of how our psychology is. So not just our thoughts are impacting our body, but our body is also impacting our thoughts. Did you know that, when we are communicating with someone, 58% of the entire communication is the body language. More than 30% is the tonality, and only 7% are the words. So how you are impacting someone else is so much determining from the posture you carry, from the tonality, from the expressions, the facial expressions that you have. Now, when it is doing so much outside, just imagine how much internal shift it is making inside you. I would like you to do this. Okay, when you raise your hands and look up, now you try to be happy and smile. You can do that, right? So try to be sad in this position. Can you be sad? Just try this. Do it with your family also, and it'll be like fun. Now just try this. Close yourself, and now you try to be happy. Try to smile and try to be like in a very happy state. It is difficult because now we have closed down ourselves, and now that entire we are now this position is more of a introspection position. This is about living life and taking risks, and then not being sad. So our posture is defining our psychology. And this is a very important aspect because if we are not in the right state of mind, just by changing our posture, our expressions, our breathing, and just moving our body can change our state of mind. This is a big tool which you have right now. Because what happens is that most of the times we succumb to the situation and given through some reaction. But when we now that we know that this is a scientific process, this is like a machine, our body is a machine and it is supposed to operate in a particular way, but now we have the intellect and the awareness to operate it in a better way, is the knowledge that sustainable well-being is all about. How you are able to use this body and the mind as tools and not get used by it. Most of the time we are so hypnotized by external situations that whatever others are doing, you just end up doing it without even thinking that whether I really want it or no. And then you think, oh my God, how did I land up over here? So this is how our mind and body are connected and we can use it as a tool. And this is like one situation that we saw, that how a sad state can be converted by changing our posture, our breath, our walk. But will it change us? How will it be sustainable, right? Slowly, you will begin to become aware of such situations in your life and you will keep shifting. You will keep using your body and mind as a tool and not getting used up by it. You will, once it becomes a habit, then each situation, any life situation that is thrown at you, you will be able to look up to it with more resilience. You will be able to bounce back easily. Even if there is a setback, you'll be able to bounce back easily because you know that you are much more than what life is throwing at you. You are more than life. You are life itself. Secondly, gratitude, the habit of gratitude, which is like since we we saw that negativity bias is something which happens naturally. That is how our brain is wired. But when we consciously think about what is working for me, what has been working for me, and I thank God for that. I'm grateful for that. What is happening? You're shifting your mindset, right? You are actually coming in that energy field which will help you expand, which will help you perform better, which will help you move with grace even in difficult and challenging situations. But that will come with practice. When you practice a thing at one in one event, it gets lost. But when you do it again and again, when situations are coming and you are using this tool, you're actually becoming aware of what thoughts you're having, what feelings you're having, and whether it is actually true. You're able to meet reality as it is than your perceived reality. And that shift is a big shift, and it changes the entire way you look at life. You start choosing resourceful state and respond instead of reacting. And there will be slips, there will be mistakes. It is a mistake, and life will keep giving you chances to try this over and over and make it a part of your being, where your mind gets wired to sustainable well-being, to approaching life, to being that grace that you are in each and every situation, to look at life as is, than imposing our tainted and blemished realities that we have created, the stories, the dramas that we have attached with each and every situation. When we look at it very objectively, as a CA is looking at their financial statement, when we start looking at markets which is going up and down very and rather than taking irrational steps like just exiting from the market, than to stay put and go through it as well, knowing that there will again be a rise. Nothing is permanent, right? And with time, there is a shift in attitude, there is a gratitude, and a shift in character. So, sustainability will occur only when you integrate awareness, conscious living, looking at things as they are rather than the view that you have about that, because our mind is generalizing and we need to know what the reality is, and focusing on problem solving than on objective than thinking that something else or outside event is a problem. The situation is a problem. Having a problem solving attitude, having a resourceful state, by managing your state and looking at problems from a problem solving perspective than a problem delving perspective, actually shifts the entire, each and every life situation. Uh, Here, one important thing is that uh, I wanted to give you an example, like say a farmer. There are two farmers, and there are floods, and both the farmers have actually lost all the work that they had done. Now, one farmer chooses to go back, look at the insurance that he has, and take steps to how to correct it. And the other farmer is sitting and crying of not taking the right action. Now, here, both of them are experiencing the same situation. One is in a resourceful state and took right actions, and the other one isn't. Now, well being is like that. When we approach life through our resourceful state and try to build that resilience over a period of time by becoming more and more aware of what situations am I experiencing and how am I dealing with it, whether I'm responding or reacting to those situations, life will change, and there will be sustainable well-being in all the areas of your life, because ultimately it is you, the common factor. If the shift happens within you, all the external things will revolve around you the way you want them to, and you'll be able to choose things better, you will be able to deal with life better and experience the art of living. So I think I'm done for the day. Thank you so much for listening.
Thank you, Supriya ma'am. It was indeed a wonderful session. Now, with your permission, I would like to take up a few questions posted by our members. Uh, so the first question, I hope I'm audible, ma'am.
Yes, yes.
Yeah. Okay. So the first question is, madam, in a situation where people behave differently to different person in similar circumstances, what is the reason? Can we call it a bias or prejudice or blame destiny or mood of the other person?
Sorry, can you repeat the question, please? Sorry.
Yeah, so this member is asking that same person is behaving differently.
Hmm.
Okay, and so what could be the reason? The same circumstance and the different this thing. So what could be the reason for such person behaving like that? Is it prejudice, bias, or the mood of that person, or how do we take it as?
Okay, sure. So, so I learned this from my past life regression, where I am a past life regression therapist as well. So there we understood that each and every situation is passing through our life, right? Like every life is right now, life is just flowing through you. The decision is happening, but there could be some situation that you actually hold into your system, like something that you didn't like. You will hold it into your system more and for a longer duration, and you will have thoughts around it, isn't it so?
Mhm.
And that is different for each and every person, because all our beliefs, our stories that we have formed from our childhood, how we experience life through our friends, through our family, through our environment, how we judged or we were judged, all this is actually creating the perception that the person has for a particular situation. Like right now, this session is being perceived differently by all, right? In this session itself, while I am coming from the same space, but each one is receiving this information in a different way, their own way. Something clicks for one, something clicks for the other. It may not be the same. So the dynamics of human being is like that. And each and every situation is perceived so differently by each one that there is no similarity at all. Like same situation is being looked at very differently. Like if you are looking at, say, a person likes you and you don't like that person so much, and that person is saying something and you are liking that person, you will listen to that person carefully. Well, that person is not even interested in what is being said, and just so this is the dynamics of human relationship, because each one is coming with their own baggage and they are creating stories in their minds with each interaction. So there is no one to blame here, because even in Hinduism, we speak about samskaras. Those are the impressions that we carry, the memories that we carry, from which place we are operating right now. And no one is to blame, because if you are experiencing something in your life, you are actually projecting that reality. As they say, beauty lies in the eyes of the beholder. The object in front of you is what it is, but you may look at it as beautiful or ugly. It is the perception or the projection that you are putting on that thing. So, yeah, I think if that helps.
Okay. The next question is, in interview, mostly person who goes in first gets selected than the person who goes last. What could be the reason?
Okay, I mean, I'm not sure if there is any statistics which shows this, but yes, one thing is that it depends upon couple of factors. Like it depends upon the impression that you are able to make. As we discussed today, that in a conversation, even in the interview, the approach is what is seen. Your line of thought, how clear you are in understanding, the clarity of thought, your the way you carry yourself, the way you are able to connect with people. There are a lot of factors. That is why merely having intellectual knowledge is not enough. Personality development, communication skills are very important, because the way you connect with people, if I am really intellectual, okay, but I am not able to connect with you, I'm not able to communicate my ideas, I'm not able to even, if I created a presentation, but if I'm not able to give that presentation, then the thing is that is half. I think that is what it is. When we are looking at a candidate, like even when I have interviewed so many people, I have interviewed the person for the role. It's not about selecting the person, first person coming in. When I look at it, I see what is the job description, what are the key performance indicators that I will be assessing that person. And if I find that the person whom I'm interviewing is able to demonstrate at least 8 out of 10 or 7 out of 10, that will be my criteria for deciding who is going to work with me. Not just that, in today's day and age, culture is very given a lot of importance, and a person's attitude towards their work, their values are also being analyzed before hiring them. because they should be an asset, not just intellectually, but overall for the organization in people and person, right? So
Yeah.
that's my perspective or my take, my perception, and my way of looking at this.
Yeah. So, okay, there is one more last question. That is, does manifestation help?
Okay. So manifestation, okay, I'll just explain it to you in a very structured way. So there are four ways or uh, four ways of approaching life. You approach life as a victim, that is, life is happening to me. You approach life as a manifester, that life is happening through me, by me. Then you experience life as a creator channel, that is surrendered mode, where you think that life is happening through me and life is happening as me, is where you are in the being state. So all these are you are capable of everything. You are capable of acting as a victim. You are capable of manifesting what you want in your life. If you know where you want to go, you're channeling your energy or focus, then you'll be able to manifest anything in your life. But you have to be constant. Your reticular activation system is what filters the information which is not necessary. So you should be able to, sorry. So you should be able to filter what is not necessary and where you want to head. That clarity is something which will help you manifest. But apart from that, even surrender, like going through life the way it is happening to you, and just maneuvering through life as your best self, it also works. But if you want to manifest something, I am sure you can. And I have manifested a lot of things in my own life by focusing on the right thing, and not just focusing, also removing all the distractions. Focus on that one, put your thought on one thing, give your full self, and give yourself the permission of taking or doing what it takes to reach there. And it will help you manifest that. It is not like miracles, like magic happening and all. It is having that clarity of thought. Yes, I want to do this in my life and I will manifest this. And by doing whatever it takes, meaning if you don't have the right skills, you should be willing to learn the right skills. If you are not having the right attitude, then you should be willing to change your mindset and beliefs for achieving what, because your person, see what they say, there are so many thoughts which keep circulating, right? If you do the thing that the way you are doing right now, you will not be able to achieve what you want to achieve, because you are continuing to do that repeated loop of things in a repeated way, and that have not resulted into desired result. That means you have to shift something to achieve something you want, and there you can actually have role models. So if so I'll, a very beautiful example is Edmund Hillary. He was the first person who climbed Mount Everest. Now he created a blueprint that yes, this can happen. Before him it was not achievable. It was like manifested by him first. Now that blueprint was there, so many others manifested that. So the thing is that obviously what you are aiming to achieve or manifest is already being achieved by someone else. So find that role model, what that person did to achieve it, and then you can pave a path and way for achieving that. So that is a right approach. Then that is why you should have right mentors, or you should have the right role models when you have to manifest, because then you are able to go there without much effort, without going through the difficulties of going here and there and getting lost on the way. So that helps to reach the goal faster.
Yeah, so the questions are over, ma'am. And thank you so much, Supriya, ma'am, for enlightening us on how to have a sustainable, happy life in an ever-changing scenario. And you have given us so many ways to go about that. So it was a wonderful session. Definitely a good investment, ma'am, from me and from, I am sure, from all the members. So thank you all the members also for making this a very good session, and all the team members making this session possible, this webinar possible. Thank you so much.
Thank you so much. Thank you, everyone.